These are some of the most interesting times in the Philippines. One of the fastest growing economies in this region, the Philippines is showing the momentum that many have been quite surprised. And yet, inflation is rising, the peso has weakened, and the stock market is down. What does this all mean for the future of the Philippines? Today, we spoke with Secretary of Finance Carlos Dominguez, who shares his views about inflation, the infrastructure build-out, the second package of tax reform, as well as the outlook for rates and normalization. We are delighted to have with us today Carlos Dominguez, Secretary of Finance, Republic of the Philippines. Secretary, welcome to the Asset.
Hello, thank you for having me.
Sir, you mark your second year leading the finance portfolio for the Philippines. What would you consider are your major achievements?
Well, first of all, you have to look at what the mission of our particular department is. And basically, our mission is to make sure that the government has enough funds to carry out the programs and projects that the administration has committed to. So it's really funding, okay? And to do that, you have to see the source of funds. First of all is tax collections. So to have good tax collections, you must have a system that is fair, and or else people won't pay taxes. It's just as simple as that.
Yes, yes.
I think we have achieved the passage of the first portion of our tax reform.
That's right.
Which essentially made sure that 99.9% of our taxpayers got benefited. We reduced the withholding tax on the salaries of people, and that was equivalent to a 14-month pay. So that's made it fair.
Yeah.
We also passed revenue measures that first increase the taxes on fuel, just bringing back the tax on fuel to what it should have been, because the tax on fuel had not been changed for 20 years.
That's right.
And this is just adjusting it to inflation.
That's right.
The other thing is we increased sin taxes on cigarettes as well as sugary drinks.
Right, right.
The main objective there is to make sure that the cost of these products, which contribute to ill health, are not affordable by the young, so that they don't get addicted to it.
Secretary, were you surprised with the speed of the passage of that bill? Because that was indeed one of the highlights, right, of the last.
Well, it took about 15 months.
That's right.
We're very happy that the legislature responded positively to the call for the president to pass the first part of the tax reform bill. So again, taxation.
Yeah.
The next item is we have to make sure that our policies are in place so that the economy keeps on growing, so that we can collect more taxes, so that actually the growth of our economy is inclusive. So that I think we have done that. The economy has expanded by 6.7% last year, and this year for the first half 6.3%.
That's right.
Which is for the conditions that we are in right now.
Yeah.
With the trade war and everything, it's not bad.
Yeah.
Okay.
Yeah.
The third thing that we have to do in our department is to make sure that the investments that we are making for the future are those that yield good returns for our people. Basically, the investments that we have made are in infrastructure, and we have managed to fund and push as well our infrastructure spending to a high point that it's never been to. Last year we were at 3.5%, and the first half of this year we're over 4% of GDP.
That's right.
So those are the things. And taxation also, we must make sure that our tax collecting agencies are honest. And I think the performance of the Bureau of Customs. For the first half of the year, they raised their collections 33%. And for the Bureau of Internal Revenue, they've raised their revenues by about 14%. So I think they're doing a good job. Plus, last year, we also took out one of the largest tax evaders in the Philippines. That was Mighty Cigarettes. And because of that, we collected 30 billion pesos in taxes. And each month now, from their volume, because we forced them to sell out, from their volume, we are collecting 2.5 billion a month more.
Which was not the case before.
No, now we are collecting 2.5 billion a month from the same volume that they were producing before.
That's right.
So I think our units are very active. The next thing we have to make sure also is that on the borrowing side, okay, that we have good credit ratings and we have maintained our credit ratings from the three main credit rating agencies. In fact, in one, we got a small upgrade. But the most important, our Treasury Department has been able to achieve the tightest spreads that we have ever achieved. You know, in the last year of the Aquino administration, their spread in the U.S. Borrowings was 103 basis points. The first year of our borrowings in the same market in the U.S., our spreads were 67 basis points.
Wow, significant.
This year, we achieved 38 basis points for the U.S. market.
Yes, yes.
We also went for the first time with a small issue of $250 million or so in the Panda market, and we achieved spreads of around 35% basis points. We returned to the Samurai market.
That's right.
After a period of 8 years with an issue of $1.4 billion US dollars. And our spread there on the average was 34.7 basis points. So again, you know, this is funding at a relatively low cost for the economy. So I think those are our achievements. We have met our goals, funding goals. We have promoted policies that continued growth, and we have achieved borrowing rates that are, as far as I know, the lowest spreads ever.
In the meantime, of course, we have seen inflation spiked up. It's top of mind for a lot of analysts. We've seen the peso weakening. We've also seen a potentially larger fiscal deficit and perhaps a vanishing current account surplus. Are you as worried as some of the critics are telling us? Is this deterioration systemic?
Well, first of all, on inflation, okay, our calculation is that our tax, the first part of our tax reform law, contributed 0.5% to the inflation rate, and that was by design. Okay, as I said, we wanted our sin products to be expensive, and we have achieved that. I think I saw a survey recently done by a foreign agency saying that the consumption of cigarettes has gone down by 9.1%, and we want to dig down deeper to find out if they are among the younger smokers, because that's really our target. So that's one. Our inflation is largely imported. Okay. Well, you know, the U.S. is doing two things. They are raising interest rates, and they are also shrinking the balance sheet of their Fed.
That's right.
The Europeans have announced too that they are shrinking the balance sheet of their Fed, so interest rates are rising. So when you have interest rates rising abroad, of course there will be more dollars demanded than pesos, and that's why our the value of our peso has deteriorated over time. But it's a natural result of what's happening abroad. The next thing we have to know is, because interest rates are rising abroad, our domestic companies, our private companies, who have foreign debt have been prepaying. And our estimate is that they have prepaid up to $4 billion. Now, that is a good sign
Yeah.
because they are responding to economic signals
Yes.
and they are responding rationally. The next point I would like to make is that, all of this turmoil that has been caused
Yeah.
by threatened sanctions and everything has driven up oil prices. Oil prices have spiked from an average of $55 per barrel towards the end of last year to almost $75 per barrel now.
That's right.
And that will impact our costs of operating here. But again, we are rolling with the punches, and we are punching back. Our central bank has been very responsive to inflation, and I think they have responded actively and positively.
Is there pressure, sir, to put in place some measures to dampen the impact of this inflation, or do you want it to, over the course of time, that it'll come down, as some of the policymakers have indicated? The estimates of the Banco Central is that these inflation rates will taper off towards the end of this year, and finally also achieve closer to the target. Our inflation rate for the first half of this year is an average of 4.3%, just a bit higher than the top range of our estimates, and we expect this to be tapering off by the third and fourth quarter of this year. So it's not necessary to intervene or do anything?
No, they are intervening.
In terms of raising
yes.
interest rate? Yeah.
No, they have increased the interest rates by 100 basis points.
That's right.
So that's a good intervention.
Yeah.
And again, I'm part of the Monetary Board.
Yeah.
And we are prepared to intervene if required in the future.
You cited external factors such as the trade war, and of course we're seeing an outflow from emerging markets. It's likely to escalate in the coming months. Do you think it's necessary to start thinking about putting in place measures to try to insulate the economy, or do you think the economy itself is able to take on those challenges?
Our economy is different from others in the sense that we don't rely too much on foreign trade. We do have a foreign trade deficit, but that is because we are buying a lot of capital goods. People are investing in new factories. They are really investing in the future. And these items they are importing are power equipment. Basically, they are also importing construction equipment, etc.
Yeah.
And we are keenly aware that this will impact our economy. But they are investments. They are not purchases of Birkin bags, okay, or Kelly bags or whatever. They are not frivolities. They are actually investments in the economy. In fact, the latest GDP figures showed that our investments have soared by 20%.
Okay.
And that's very healthy.
Yeah.
Our direct foreign investment have also soared by 45% for the first 5 months of this year as compared to last year. So we are transforming slowly our economy from a consumption-led to an investment-led economy.